The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Ana Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast,
where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us.
This has been a much awaited episode. We are finally going to talk about micro investing, which is very exciting. Did you know that you can start investing with as little as $5? In fact, investing $5 a day can result in $364,000 in 40 years, assuming an average of 7% return each year, which is pretty cool. But first, before we dive into that, let's talk about money wins and losses.
I love plants. I don't know. I like
full stop. That's it.
Yeah, full stop. I love plants, and I spent $50 on a plant, and I'm totally okay with it.
Oh, wow.
And it feels good, and I love that plant, and my child named the plant, and
what did they name it?
Novi.
Novi?
Yeah. I don't know why. Okay. Novi. Cool. Just Novi the plant. And every day my kid will just like touch the leaves of the plant, but I love plants. They just make my place happy, and I have no problem spending money on plants. My partner does make fun of me because sometimes they die and then it's like $50 just like went down the drain.
Did you know that Bunnings will replace some of the plants that you kill?
Really?
Yes.
What?
I found this out the other day. Apparently, if you take it back, I don't know the terms and conditions exactly, but if you take it back, they can replace it.
Because there was a cacti that I bought and literally a week later it died for my kid's room.
And apparently, even if it's your fault.
It was not my fault. It was definitely like, it was the plant. We didn't water the plant. Like it's a cactus. We don't.
Yeah, but I didn't know this either because they don't really advertise it that much. But yeah, apparently this is a thing.
That's like a double money win now that I know, because this plant is also from Bunnings.
Take it back.
Yeah, but Novi is doing well. Novi has a nice happy spot, but the cacti I just chucked. Actually, maybe I didn't. Anyways,
I'll have to Google it because I've only heard someone tell me about it, but I
will report back. I'm going to see about this cactus. But yeah, so my money win is a happy plant living in my house that makes me happy. And every time I walk by it, it just like makes me happy.
Amazing.
Yeah.
Mine is less happy. I got a speeding fine in Canberra for driving like 3 or 4 kilometers over the speed limit in a school zone. And I know that is bad, but in Perth, the school zones are only during like the start time of school and the finish times of school. But in Canberra, apparently school zones are 8 a.m. till 4 p.m.
That's a lot of money.
Yep. And then the fine is like $370 something, whereas in Perth, it would be $100.
It's interesting how the fines are different based on states.
Like so much as well. And in Perth, you don't lose a demerit point straight away, but in Canberra, you do. And in like Melbourne, I'm pretty sure you do as well.
So now you lost a demerit and almost $400.
Yeah. For going 4 kilometers over it at lunchtime with no kids around.
Luckily, no one was killed.
And they don't really sign them as well as Perth either. Like they're not big flashing signs. Like apparently you're just meant to know.
Oh.
Yeah. Anyway, being a bit salty. I know I shouldn't speed, but a little bit salty.
Yeah. No, it's like, yes, especially when you think you're aware of the rules, but you're not, but you didn't know better.
And you just kind of like drive on autopilot as well a lot of the time. Like you barely are paying attention sometimes, which I know is probably bad, but you know the rules and you're like, okay, cool, just driving 50 because it should be 50, but no.
I can't wait for like fully automated cars so I don't have to even think.
Yeah.
They can worry about the speed zone, not me.
In today's episode, we're going to explore the pros and cons of microinvesting, when you should consider microinvesting, and what to expect. We're also going to have a part 2 of this episode where Anna is going to go through some of the popular microinvesting platforms like Raise, Comsec Pocket, Spaceship, and Perla Micro. If anyone is curious, I am not allowed to talk about Perla Micro in that much detail because of licensing rules. So I'm licensed by Guideway, and Perla Micro is like a managed fund, and there's some conflicting rules around being paid to promote managed funds. So Anna's going to be doing that with either Hayden or Nick from Perla, which will be heaps of fun.
So let's dive into it. What is micro? Micro investing is essentially a strategy where you can invest small bits of money that can grow over a long period of time. Now, they're often managed funds, so that's a little bit different than when you have Chess-sponsored shares. But what that essentially means is that you own a unit of a fund rather than the underlying investment that it follows.
The fun thing with microinvesting, as the name suggests, is that you can invest small amounts regularly over time, and it's a really good learning tool.
Yeah, and usually this is suited for people who have smaller amounts of money, they want to learn as they go, and they just want to build confidence because investing can feel overwhelming, and this is just a really great way to get into the market.
Have you tried microinvesting platforms before?
Yeah, I have. So I think it's really great for people to just learn, right? It takes out the stress of trying to figure out what to invest in. Usually there's limited options. So you only have like maybe 5 to 10 options that you can choose from to see what suits your needs. And it has really great features. So often with micro investing, you can do things like roundups where small amounts are invested on your behalf. So for example, you buy a coffee, that's $4.50. The 50 cents can go straight into your investment without you thinking about it. So you're building wealth without even noticing. And small amounts over time can also allow you to understand how the market fluctuates, because if you have a dip, how are you going to feel about that if it's thousands of dollars versus maybe tens and 20s of dollars?
Mm-hmm. Yeah, I started initially just with buying an ETF. So I've told this many times now, but I bought an ETF called IVV, which is an S&P 500 ETF. I put $1,000 into that. And then I was a bit like, okay, now what? Like, am I going to lose all of my money? There must be another catch to this. Like, I don't really understand what I'm doing. And then I kind of kept investing slowly into that. But I also opened up a Raise and a Spaceship account. And I ended up building both of those up to like $10,000 each until I sold them and moved out. But that was really good for actually being involved, being confident. You just pick one of their portfolios. You don't have to worry about picking so many different ETFs, and you can just watch it grow. And I never did roundups, but Raise had like Raise rewards where you could get kind of cash back in there as well. I had automated, I think I had like between $10 and $25 set up a week on each of those as well. And I just kind of watched them grow. And it was really, really fun.
It's also a really great way for kids to learn too, because it's small amounts. So if they get allowances or if they're getting birthday money, they're putting money aside and they can actually see that grow as opposed to needing like $500 to invest.
We've kind of touched on the pros and cons already, like some of them, but let's go through the list of them. So the first one is accessibility. Like we said, you can start with small amounts. I think Raise is like $5. I think Spaceship might be similar as well. There's other platforms that start from maybe a cent too. So they're really easy to access.
And it's also user-friendly. So usually it is designed for beginners who don't really know how to invest, what to invest in. So this is just an easy kind of accessible way to get into it and not be stressed.
I think they all have automation features as well. So you can automate your investing. We talk about this so much. Automating your investing is key to making it a habit and sticking to it long term. So it's great that you can do this.
Because so much of finance is actually behavioral. And it's less about the money and the dollars and the math. And it's actually about, do you do it regularly? Do you do it often? And do you continue on with that even if the market is up or even if the market is down?
Yeah. And $5 a week might not seem like much. And you might be thinking, oh, is it even worth bothering? But I think it's so good to start building that habit now and learning how you react to the market as well. It's kind of like we were talking in other episodes about exercise. So saying you're going to walk for 10 minutes a day will build and consistently build until you are walking for maybe like 20 minutes a day or 30 minutes a day. And it's the same with investing as well.
The next point is diversification.
It's really good with some of these micro platforms. They have diversified portfolios for you already to pick. So you can pick maybe like a high growth or an aggressive one, and they'll have like Australia, US, some emerging markets. Sometimes they have bonds. Some of them I've seen even have Bitcoin these days as well, which is very fun. So it's good being able to pick one diversified portfolio already.
The reason that diversification is so important is because we don't want to put all our eggs in one basket. We want to have a diversified portfolio that holds a lot of different things. If we're only invested in Australia and something happens to the Australian market, we might be in a really bad situation. So diversifying across countries, across sectors, across assets is really important.
Yeah, and it can be overwhelming when you're trying to do that yourself and trying to pick different ETFs to do that or different shares to do that. So it's great when some of these micro portfolios have already diversified options for you.
Yeah, and the great thing is that you can access those international markets, and being diversified can reduce some of your risk.
A lot of them have really good educational resources as well. So lots of information about how to invest, learning about the stock market, and some also have community platforms or forums as well. I've seen just generally on Pearler, there is like the Pearler Exchange where you can ask your questions and some financial advisors or other people might be able to answer them for you.
Yeah, and you can also see what people are invested in a lot of places. And because micro investing is geared for beginners, it is a really great way to learn about investing in general, what the jargon is all about. So what ETFs are, exchange traded funds, and how you can invest in them in small little bits and pieces. Some platforms also are goal oriented. And this is really great because investing is for the long term. And you don't want to kind of get distracted by things. You want to focus on your goal, on long-term investing, whatever that might be. And having goals to set up to kind of celebrate your wins along the way is really important.
Yeah, definitely. It's hard to stick to something if you don't know why you're doing it. Like if you wanted to be like, I'm going to go for a run every single day, but you're not training for a marathon or training for a 10K, you'll get up and be like, well, why am I bothering? There's no point.
Yeah. And the same goes with investing. So having a goal in mind and tracking it is really beneficial. And that's why micro investing is a really good thing for that as well.
One of the biggest pros is definitely convenience. Like there are beautiful mobile apps. They're very easy to use. They walk you through picking your portfolio as well. Like it is just very easy to set up, easy to use, easy to withdraw your money as well.
That was the thing last night. We had our book launch and someone came up to us and was like, I'm going to go home and invest right now. I just feel excited and ready. And it's really great to hear that because it doesn't need to be hard. It doesn't need to be overwhelming. And the convenience of just getting started can actually just set you up.
And there's less options. So when you go to buy like a share or an ETF on something like ComSec, you've got to go through like, do you want to put a price in a market order or a limit order? And that can be quite confusing if you don't know what those things are. With micro investing, they take a lot of those decisions out. You pick a portfolio, you pick how much, and you're pretty much just good to go.
Yeah, essentially you do it right away and you're done. Yeah. Some platforms also allow you to invest in social and ethical portfolios. So what that kind of essentially means is if you want to invest in socially responsible things so that, for example, you don't want to invest in fossil fuels or weapons, there are options around that as well. So if the ethics around investing is something that is important to you, there are options for that.
Yeah, I think most of them have ethical options now, which is really fun to see.
Yeah, and some platforms also allow you to do donations for charity, which is kind of really cool, kind of linking money and investing in long-term thoughts around that, but also around helping others.
Is that a Perla thing?
Yeah, we have that as well, that you can kind of donate your brokerage credits as well.
Yeah, I haven't seen that for a little while. I remember they were talking about it like years ago, but I haven't seen it advertised. And the final pro is just being able to experiment and have skin in the game and actually experience what it's like to be an investor. Like we've said many times today, you don't want to put like $10,000 in and then be very terrified if the market drops and not know what to do. So experimenting with $10, $50, $100 is a lot easier.
And also with micro investing, it's slightly lower risk because you are diversified as opposed to investing in just one company, in one sector, in one country. And that's also the benefit.
So we have talked it up a lot today. What are some of the cons?
Some of the cons are limited returns. So due to the small investment that you're putting in, your returns might also be limited as well.
The big thing over the long term is the fees. So usually micro platforms charge you an ongoing monthly fee to manage your portfolio, as compared to when you buy something on like Perla directly through a CHESS sponsored broker, through Superhero, through Self Wealth, you pay one brokerage fee, but then you own it. And yes, you have to pay management fees for an ETF, but you're not paying an ongoing micro account fee as well. So while it's great to learn with smaller amounts and shorter term, it might not be great to hold micro investments for 40 plus years. It might be good to eventually transition those over to another platform. But yeah, just comparing that longer term.
Sometimes I think about that as a gym membership. You know, you pay to go to the gym and you have to pay that membership every month. And micro investing is kind of like that as well. It's trying to hold you accountable because you're paying the money monthly to invest. So you should be investing monthly.
Yeah. And you're paying a fee to learn, because I think sometimes we can get very caught up in the fees and trying to minimize these, but you literally are paying a fee to learn. And all of them, I think, is still cheaper than a coffee at the moment.
Another con can be oversimplification. So micro investing is pretty simple, but it can overlook some of the complexities around risk, around your tolerance, around your needs when it comes to investing. So again, it's really great for beginners, but if you want to have a more complicated portfolio or there's specific shares or ETFs you want to invest in, micro investing might not be ideal.
Back to the fees as well. These can eat away at some of your returns if you only have a small amount invested, but if you're just looking at it as a fee to learn, then it might be okay.
Yeah. The other thing is micro investing has pre-selected portfolios. So again, you can't really customize things, just something to be aware of, but it might be a really great starting tool.
Yeah. And with it being oversimplified as well, you don't have a lot of control over when you buy and sell things. So it is very just automated. Whatever happens, happens. But if you're just wanting to invest in an easy way, you don't want that much control anyway. Another consideration is most of them don't let you just transfer things over. You usually have to sell and then rebuy when you want to leave. So that means you will have to probably pay capital gains tax. So that's not the most tax efficient way to do it ever. But I think it's worth it just to learn if you're not confident enough to go straight to a CHESS sponsored broker.
Alternatively, it's worth talking to a tax accountant so that you can plan when you are selling some of your micro investments.
We've mentioned CHESS a few times. What does that actually mean for anyone who doesn't know?
Yeah, so this is really important. There's a big difference when it comes to micro investing and share investing that are CHESS sponsored. So what CHESS stands for is Clearinghouse Electronic Sub-Register System. And that's essentially a system that the ASX uses that takes a record of what shares you're invested in. And it provides some kind of security because that means that you have direct ownership of your shares. However, to invest in CHESS sponsored shares, you usually need to start with a minimum of $500. So that's why Chess sponsored isn't included in micro. So micro isn't Chess sponsored.
And yeah, even with brokerage fees, it's sometimes not even worth investing $500. It might be worth investing $1,000, for example, to make the most of those fees. But yeah, it is a higher starting point.
So yeah, the big difference between Chess and micro also is that micro is a managed fund for the most part. So you are actually buying and selling through a managed fund. And some of these do track ETFs. So the underlying asset could be an ETF, but you are not directly invested in that ETF. Now, the benefit of micro investing is you can start with, 1 cent or $5 versus Chess, where you need to start with at least 500.
So in summary, micro is great if you want to learn with smaller amounts. It might not be great for a really long-term strategy, so 40 years, for example, but definitely a great starting point. I started with micro. I know so many of my friends started with micro. I hear so many good stories of people starting with micro. I set my mum up with a micro platform for a little while as well because she wanted to learn independently. So they are a great starting point. But yeah, there are a lot of options too if you feel like you're past the micro stage as well.
Yeah, that's it.
We're going to have part 2 with Anna. So keep an eye out for that as well, where she's actually going to compare the different platforms. So if you're like, cool, I want to micro invest, but I'm not sure which one I want to use, definitely look out for part 2 coming and she'll compare all of them for you. Okay, bye.
Bye. Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invest or me at Ana Cristina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.